Hello and welcome back to another video. In today's video, I'm just going to be sharing with you how I'm actually anticipating market participants to trade dollar index, eurusd, GU and the 10-year US government bonds going into next trading week. Now, as we can see, going into this year, from our current monthly candle, you can actually see that market participants have chosen to actually trade the dollar index lower. Now, what does this mean? This means up until this point now, going into the remainder of our monthly candle, more likely than not, we are going to see some of our significant lows actually get reached within the remaining days of our monthly candle. Live now, 22 days remaining. But going straight into this week, what I'm actually anticipating is market participants to actually trade price into our monthly discount significant fair value gap. Now, from here, what I'm actually anticipating is some sort of retracement back into our previous week's leg. Now, as you can see, we actually have a range of our daily fair value gaps, so it's going to be important, not just to pick one and anticipate price to potentially, push up, all the way up to here, then you'd be looking for shorts. This week is going to be actually important to adapt to price in live time. Quite simply, we could see something, run to our sell side liquidity into our monthly fair value gap to the downside, and then trade back up. And as soon as we tap into, our first daily fair value gap, then we might straight away, see displacement of the lows. Going off of our economic calendar this week, we can actually see that our major high economic, folders are going to be CPI on the Wednesday. So with it being Wednesday, this means more likely than not it's going to actually, the weekly candle will be somewhat predictable by then, potentially, from what we've seen in previous weeks when CPI has actually presented itself. So potentially, if, the right parameters have actually presented itself, and if market participants have traded in a fashionable manner, where we can pick up on these so-called clean price action, then yes, a swing trade to the downside, targeting some of our external range lows, such as this low here, may be very valid. But as mentioned, what you want to be focusing on, straight away, the first trade of this week is going to be the retracement profile. Now from here, when we actually do trade into here, we can actually assess how market participants trade. It may be the case that we trade all the way up to this high. It's Thursday, and then we, get some sort of range of consolidation. But what I am actually favouring is a run up, get our CPI driver into play, some sort of manipulation framework presenting itself, and then we get our run lower, potentially even seeing our external range lows being targeted. Now, very, very similar for Euro USD, obviously mirroring the dollar index. You can see how market participants have, chosen to trade up until this point, meaning more likely than not we are going to make a run for this high, which happens to align itself nicely with our monthly fair value gap. So this is going to be my buy side draw for Euro USD this week. Very, very similar. What I'm anticipating is participants to actually trade price back into this leg that we've seen in our previous week, and then we get, the framework needed for a push to this high. And then, we may get some sort of retracement, then continuation going into the latter half of the week. Just taking a quick look at our US 10-year, what I'm actually anticipating is our new week candle to actually make some sort of open high and then low close from the weekly candle perspective, making a run, for our weekly fair value gap here, which obviously aligns itself very, very nicely with my overall current bias for the dollar index. Quickly looking for GU, very, very similar, aligns itself nicely with the dollar index, and how we've actually seen our euro trade to the British pound, but I'll go over this more in the Telegram. But we can actually see that market participants are making a clear run for some of our internal range highs as of now. So we could potentially see a run up here, and then towards the latter half of the week, once we've actually had our CPI come into play, and if we get the necessary framework put in, our manipulation to the low, then this is where I'd be looking to get in, a potential expansion trade, swing trade to our highs. Now from this point, if it's Thursday and we're looking super bullish, then yes, we may make a run for the high, but it's important not to get greedy, you know. Just remember to actually trade what's presented itself in real time, and, you know, waiting for the necessary daily candles to present themselves and actually materialize to make it more predictable and making trading, you know, a lot easier to take advantage of these moves on an intraday level, if that's, you know, what you actually choose to take advantage of in the first place. So I do hope this video helps. I hope, you know, it's cleared up a few things on my overall bias. But as a whole, what I'm actually anticipating is lower dollar index. You know, I want to see, you know, the framework to the upside, then I want to see our manipulation, and then this is when I want to see CPI act as our driver to the downside. So thank you very much again for listening. If you have made it this far, we'll obviously update the, you know, my overall biases and outlook for the dollar index through USD and GU as the trading week goes on. But as mentioned, many thanks if you did make it this far.